Thank you, Mr. Chairman, and thank you, Madam Chair, for being here and for your work. As you know, many of us, certainly including Senator Brown and I, are concerned about capital requirements at the biggest banks. Can you confirm that U.S. regulators are close to finalizing the supplementary leverage ratio that would impact that? And if so, when do you expect that final action to be taken?
So this is high on our regulatory agenda for this coming year. We have out an initial proposal on this, and while I can't give you an exact time, we will certainly be working with the other agencies to
Can you give us an exact
this.
time frame, a general time frame when you would expect the Fed to act?
In the not-too-distant future, I would say.
Okay. According to the Wall Street Journal, Vice Chairman Honig said that regulators are unlikely to change the draft proposal with regard to a 5% capital buffer against all large bank assets and a similar 6% buffer at their insured deposit-taking subsidiaries. In contrast to that, there has been concern that you might follow Europe's lead in watering down some other provisions from the initial draft concerning things like a weaker treatment of derivatives and valuation of repurchase agreements. Can you give us any insight into where those things stand in your discussions?
So, I mean, let me see if I understand what you mean here. I mean, we came out with the proposal for the 5% and 6%
Correct.
holding companies.
Do you think there's any chance that will change in the final action?
I mean, this is something we've been quite supportive of, and
So
I'm not envisioning.
Okay. And then deeper in the weeds, if you will, there has been some suggestion that you could back off some other elements of the draft, for instance, on issues like the treatment of derivatives and valuation of repurchase agreements. Do you think that is any possibility? I would hope not. I think there are others on the panel who would hope not. I would encourage you to not weaken any elements of your draft, but is that under discussion?
So I'm not aware if it is under discussion. I would have to look into that, but my objective would be to come out with a strong proposal. We have increased greatly risk-based capital requirements. In light of that increase, I see leverage and risk-based capital as sort of belt and suspenders. It is definitely, in my view, appropriate to increase leverage requirements more or less in line with risk-based capital requirements.
Right.
And
well, I would just encourage a strong final set of proposal or set of rules as strong or stronger than the draft. So I would just encourage that. Let me move to one other topic I wanted to hit, and this is actually related to this too big to fail issue, which capital requirements are also about. A lot of us have a concern about the squeeze that community banks are getting in the financial sector. That has been a historic long-term trend. It has gotten even a lot worse since the 07-08 crisis and since, and I would argue in some cases because of Dodd-Frank. So it's going from bad to worse in terms of a trend. If you look at Federal Reserve Board membership, there is also a trend, and it is away from representation of any community banking or community bank supervision experience. Let me just put a chart. The chart is up, and this shows, it's a little busy, it's color-coded. This shows sort of the makeup of Federal Reserve Board members over time. And any community bank and community bank supervision experience, which is the yellow, is limited, and there's been a huge growth over time in terms of folks with a pure economics and academic background. In particular, right now, there's one person with that sort of community bank or community bank supervision experience, and she is leaving. So soon there will be none. What would your thoughts be about a requirement to have at least one person in the future with that type of community bank or community bank supervision experience?
So I've had the privilege of working with Governor Raskin and previously Governor Duke, and I can certainly say that they made huge contributions in the community banking area, and the background that they were able to bring was extremely helpful to us in crafting regulations and approaching our supervision responsibilities with sensitivity to the special issues that community banks face. I hope the administration would consider an appointment of someone with that kind of experience, and I can certainly attest that it's very helpful to us in doing our work.
Great. Thank you. Thank you, Madam Chair. Thank you, Mr.